Boom, we are alive, ladies and gentlemen. We're going to be taking a look at Bitcoin, the volatility index. We're going to go over Ethereum's price tag as well. And then I want to make some conjecture over XRP and the SEC because I don't know why, but I'm not very happy that a bunch of the crypto community are rooting on the regulators when the regulators have done nothing but get in the way of this nation technology exploring what it can do. So with that in mind, we're going to dive right in. Okay, so Bitcoin open on the daily. Look how high up we are at the moment, $22,341 on the perpetual futures side of Binance right now. Here, I'm going to circle the noticeable pandemic. So, ladies and gentlemen, for those of you that are new to market cycle understanding, the idea of when you buy when others are fearful was highlighted perfectly, and I think this will be a lifelong lesson for many. In the middle of the fear, the height of the pandemic on March 11th, when the whole world started shutting down, that was the best time to start accumulating Bitcoin. The next best time was pretty much every other day after that, and I want to go over some thoughts here as well, because for a lot of people, you're new to investing, this is like the first time maybe you've ever thought about investing. Don't worry too much about price. Just make consistent buys and purchases in smaller amounts. That way you're not losing sleep, and that way you're not waiting for the price to come down. You're continuing to find exposure while at the same time educating yourself about how this space works, because it's quite complicated, and that's why you're rewarded for participating early on, is because it actually is it's like a giant skill testing question to be able to play with Bitcoin. So when we're up this high, we always want to be a little weary of the price, right? So we're looking and maybe expecting a little bit higher of a breakout to 26 to 28,000, not confirmed yet. But more importantly, we just want to recognize that we are already, let's see, from the height of the pandemic to where we are now, approximately 400%. I'm sure if I included the wicks, it would be like 450. So we're quite high. The previous buying range right before we broke out of the trading range was down here at around 10,000. And I think that this represents, I'm going to open it up on my other screen here. Let's go back to this one. We'll open Bitcoin up and we'll show our kind of daily breakdown because we've been watching multiple trading ranges. Now, what's interesting is that we had kind of gone over this before when Ethereum first had its breakout. What you saw is that the accumulation ranges actually get shorter and tighter. This is one of the reasons why I think we're in a very small reaccumulation range now, is because it's tightening up before we get one final explosion up before we get that nice LPS phase. I have never not once seen the SOS turn into a backup phase of around 30%. I'm expecting that. If it doesn't happen, wow, amazing. Something that I've never seen happen before happened. We call that a black swan. That means if we keep seeing white swan, white swan, white swan, all it takes is one black swan to invalidate that entire thesis. And now I have to therefore look out for these potential black swans. We're not there yet because Bitcoin hasn't broken too much above that 26 to 28,000. If it continues to go past 28,000 to $40,000, well, I'll change my mind then and go, whoops, and we'll look for what's likely becomes a larger LPS after that run to 40K. Although I don't want to even speculate about that right now. Let's just go one step at a time. We had our nice accumulation range here in September and November. This is like the primary time. This is when Michael Saylor's MicroStrategies first made their accumulation. The second accumulation range, again, very short-lived and explosive to the upside with another 20% move. On a 26% move outside of that trading range. Now, as we get smaller and smaller into the time frames here, it looks like we're building another accumulation range. Yesterday, though, I took the day off. It was at least this intermediary term here was looking very distributive. This was looked like a hypodermic top, and then it came back down, retested our point of control, which is always nice to see. Now, we're staying above the point of control, which is great. This might be the break above the creek that we're looking for. It was a little early. This is why I always recommend patience in trading ranges. You get excited about the markets, like, oh my God, it's moving so quickly. Don't do that. We all are victim and guilty of doing those things in life in general. It's good to be patient. Let's let this trading range really show us where it's going before we make any moves. I did get stopped out of my position at probably around a $1,500 loss. Not that big of a deal. Back to just puts you back in some of the profits, but nonetheless, it was because I was impatient with this trading range. I was excited the other day. I'm like, oh my God, but don't do that. Don't get excited. Let's wait for the trading range to really show us where it's going and then make those educated moves. Now, ultimately, because we're in a bull market, the bias should be bullish. But when we're up this high, we want to, again, remember that there is a pretty instantaneous reaction to the downside that could swoop us maybe 30% downwards. And we would love to see that. I think the market in general would love to see that. Again, if it doesn't happen, cool. Here's the first black swan. We need to reiterate and readjust our strategy. But for now, we're assuming that run to 26, maybe 28K, followed by a bigger LPS, and then the real bull market should arrive closer to March. Now, it could be wrong, but let's just go a step at a time. So currently, it looks like we're going to, again, I think we're bullish. So we'll stay above the POC, get above the creek, and then blow out. That would be really nice. I was a little early on here with this one. I tried to take the position here. Bad idea, TO. Let's just be more patient until we're like above the trading range and holding above the trading range for a little bit, not below it like we were here. That was a little silly of me, but we're always making mistakes. We're always learning, and we're always trying to grow from those. So because of this, I want to take a look at the volatility index because yesterday the people are like, oh my God, the market's dumping because of the XRP news. No, that's not the case. It had nothing to do with XRP. The general markets did that outside of the crypto ecosystem, had nothing to do with that news. But what we do see is likely a bunch of traders positioning themselves to take the time off between Christmas and after the new year, much like what I'm going to do. The next episodes over the holidays here are probably just going to be vlogs and me walking through the jungle or by the beaches because it's time to take a little bit of time off work before hitting back in there again. I think that's the general sentiment, so we'll likely see a kind of a collapse in market sentiment, or at least a relaxation of it in the meantime, which gives us maybe like a week of chill time. That would be fantastic. A week of chill time would be fantastic. So on the VIX here, we saw this massive spike up, almost a 30% spike up, and then we've returned back down to normal. This is a really nice positive sign. I'm not sure where that volatility came from. Again, we looked at it the other day. But we're still really high. If we go to the daily on the volatility index, you can see we have we're in peak breakdown moments. Like if you were to compare where we are now to the financial crisis of say 2008. Okay, so here's the somehow the financial crisis of 2008 didn't really kick in until 2009. As you can, and we'll put this up on the weeklies here. The 3 days actually probably cleaner. Yeah. Okay. So here you can see somehow the financial crisis of 2008 scared people just as much as the pandemic of 2020. Doesn't make a whole lot of sense in my mind, but there you have it. This kind of fun little smiley face between 2008 and 2020, kind of laughing at us probably. Ha ha ha. Enjoy life, humans. Anyways, the point of this is this funny smiley face chart. You can't spell chart without the word art. I'm comparing right now the volatility of both 2008 crisis to the crisis we're in 2019. I think this is a much longer standing crisis. The currency, the inflationary aspects of which this might potentially bring to the table is going to be much harder and much more noticeable, especially when the U.S. government only offered $600 after all that waiting about who was president, it seems like. More importantly, though, when the markets are in a volatile place, what's fun to see Bitcoin do is that Bitcoin's been holding strong through all of this volatility alongside a lot of the tech sector. This pandemic has forced a lot of people to work online, and a lot of people have figured out how to do that. People that didn't used to work online now work remotely. And that's changing a lot of things around the world. So we're going to take a look at Ethereum because I want to go over this as well. I think we've got Ethereum's point up here. Yeah, here. Ethereum, nice big story. Again, we try to remember the full picture that's going on that took us here. We went through 1,000 days of accumulation in Ethereum to get to this bull market. So it's like, you know, right in time. That's why patience is so important. As you can see, we have the primary breakout before the trading range, the SOS, a recall into the backup point, and then another SOS. And as you can see here, the two measurements of the SOSs are actually somewhat similar. Here from the first trading range to the top of the peak, you have around a 98% explosion. And then again, from the bottom of the trading range to the top of the trading range, another 100% explosion for Ethereum. So Ethereum's done quite well in this trading range sequence. Because of that, it looks like we may be in a rising gradient bottom, but it also could very easily turn into distribution. Now, this last spike we saw, it took a lot of pressure to get us up here. So I'm being a little patient for finding a position with Ethereum, especially with Bitcoin. I rushed in. I don't know what I was thinking there. It just looked like the timeline was I guess compressing itself. So I thought we might explode a little sooner out of that time frame. Anyways, nonetheless, we are looking at a new trading range here with Ethereum. And if we go into kind of an earlier representation of Ethereum's time frame here at the daily, you can see the potential of this trading range. Now again, we do have a reaccumulation range which does this, breaks above the box and kind of comes back into the middle of the trading range. And right now, as you can see, I'm going to clean this chart up because these other indicators are not for my daily analysis. You can see the POC line, which I've highlighted here in green, is actually holding the price above for Ethereum. Now we did have a quick spike below, I think all the way to like 560 during that little bit of drop in Bitcoin. Again, that was in the general markets. It happened in the tech sector, the S&P 500. It was not isolated to the crypto sector. So I think that's an important part to keep in mind. It was the general sentiment of the population. So this POC line here, right where we're at, is hopefully it looks like it's going to hold support for Ethereum, which again would also lead to that bullish indicator for Bitcoin as well. I actually weigh both of them together. It's better to look at the entire market growth. Ethereum makes Bitcoin more valuable, period. End of story. I don't think everyone has recognized that yet. But I'm really excited about it because it brings a whole new layer of helping serve the underbanked, which is really one of the reasons why I love this sector to begin with. I want to finalize here by kind of talking about XRP. I guess I'll pull the screen up to look at the price. Not that that's the main point of this, but I wanted to go over and kind of go shame on you to the content creators, the figureheads, and I guess the general commentary around rooting for the regulators on Ripple's price. Now, it would have been a great time to go short, having note that. But what I want to do is go, why? One of the fun things about making mistakes is that you should learn from them, right? We don't need to save people by regulating ahead of time. We should actually let them fail. We should let a bunch of people fail even further so that they can learn that the oven is hot when you touch it, right? I've been saying I'm not a big fan of XRP for quite some time, but you need to let people make mistakes in order for them to learn. If we don't do that, all we're doing is creating more stupidity, because then we can rely on the regulators to come in and file. And then what does the SEC do? Oh, hey, we're filing charges against Ripple and the price drops. How is that not price manipulation unto itself? How are they not then also affecting those retail investors who didn't know better? The SEC should also be ashamed of itself for doing the exact same thing it's trying to get Ripple for. It's absolutely ridiculous. I'm not a big fan that our community has gone down the way of like rooting on the regulators, who are part of the problem to some degree. They don't help anyone. They come in after the fact. Now, sure, we could talk about the difference, we need a little bit of regulation, but more freedom, especially in a technology sector like this, really provides a better space for everyone. And we're seeing the ripple effects of that, as pun intended probably, as we move forward. I think it's much more important to embrace the fact and let people make failures than it is to come in secondhand and regulate it. Shame on the content creators who've supported the SEC in filing suits against Ripple. Why? Our entire space should be about growing and exploring, not this tribalistic, we were right, you were wrong, blah, blah, blah. It's just sad to see. Anyways, we're going to leave it out at that. Give us a thumbs up if you like this content. Happy holidays, ladies and gentlemen. I'm going to be doing some vlogs about Costa Rica the next few days. We got some stuff to go over. I want to talk about a big failure I made in 2017. I think that's important. I think it'll be a fun one to go over too. You know, I don't talk about too many of my big failures, but I've had some costly failures alongside my successes. So I think it's time we start to go a little bit more personal with some of the side time, so I can make more vlogs. We're going to bring on a video editor for Q1. Hopefully, Baloo's going to continue helping write the free newsletter for us in Q1. We've got 2 new PDFs that will come out this month's newsletter, more and more content. We're going to do a lot of fun stuff with the private bear den. We're looking at ways that we can use staked staked Bear to produce liquidity, so that any of you guys that want to stake your Bear, you can actually help contribute to our Kiva campaigns as well through the Bear that you earn. It's kind of fun. We're playing around with how the community can help support the underbanked and the underserved, at the same time learning and experimenting with this fun technology. So we're going to keep offering new ways to play with this because it's all open source. A lot of this is all open source. So lastly, guys, yeah, as you can see, look what that did to Ripple's price. Bang, 56% retracement all the way back down to its low, I guess. Anyways, I don't think we should be rooting on the regulators, guys. I think we should be allowing people to make mistakes. I'll leave it at that. Stay with the Arcane Bear. Hey, look, thank you, guys. Love you. Happy holidays. Merry Christmas. Happy Hanukkah. Whatever things you might be celebrating. Happy solstice. All that stuff that's gone. Here, come. We'll go. Be back again next year. Yeah, we'll see you guys again on the next episode. Signing off for the rest of the day. Oh, hey, look at this too. We got an outro logo.